Hello viewers, welcome to my channel. I'm Hasham. So far 10 problems I have completed on computing the income from house property. In this video, 11th and 12th, two more problems I'm going to cover up. So watch the video till the end, don't skip in between. If you want the complete knowledge, complete command on the subject of income tax, watch all the videos. You have to keep a rhythm of watching one video with another. Otherwise, if you join in between, if you leave in between, you cannot be able to understand anything. And all the problems are based on the theory. I'm getting a lot of messages from the students, comments from the students that they want directly the problem. How? Without putting the foundation, without putting the first floor, can we go directly to the fourth floor and fifth floor? It is not at all possible without foundation. So this provisions, the theory are very, very important. That is the foundation of the problem. Directly we cannot go to the problem. So my suggestion, if you have not watched the earlier videos, go to the playlist of my channel, select the subject income tax for the assessment year 22-23. Watch the videos of all the theory regarding. Only two videos I have given for complete provision of income from house property. Watch those videos, be perfect. Now before starting the 11th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the points of 11th and 12th problem, then I'll explain. Come on, see the 11th problem. See the problem carefully. Sri Indra Mohan constructed a house in Delhi in 2010 and transferred the house for a consideration of natural love and affection to his wife. Presently, the house is let out on a monthly rent of 30,000, including 5,000 for services provided for residential purpose. So what this first sentence says, Mr. Indra Mohan has constructed the house and transferred the house in the name of wife on a consideration of love and affection. Income Tax Act says love and affection is a consideration from social point of view. But from income tax point of view, when a person transferred the property to the wife on the basis of love and affection, there is no consideration at all. In that case, the transferor will be treated as the deemed owner. Here the transferor is Indra Mohan. Indra Mohan has transferred the house in the name of wife. Presently, the legal owner is the wife of Indra Mohan. But from income tax point of view, income tax will treat Indra Mohan as the deemed owner because without consideration, he has transferred the property in the name of wife. So Indra Mohan is liable to pay tax on the income of the house property. Now, actually the house was let out for a rent of 30,000, including 5,000 for services provided. That means the house of the rent of the house is 25,000 and 5,000 rupees are charged for services provided. So Income Tax Act says only rent of the house will be taken under the computation of income from house property. The service charges taken, that will be taxable under income from other sources, right? So here out of 30,000 we take only 25,000 for registration. Municipal rental value MRV is 2 lakh. The municipal taxes are 10%, 10% on MRV. It is agreed that tenant should bear the cost of repair and the owner provided the following facilities. It is immaterial who pays the repair charges because repair charges are not allowed as deduction. Whether it is paid by owner or whether it is paid by tenant, immaterial. Don't consider repair charges. And the other expenditure incurred by the owner, gardener's salary 12,000 to maintain the lawns and water charges 2,400. This gardener salary and water charges, these are the facilities provided by the owner to the tenant. For providing these facilities, the owner is charging service charges. So this cost of facilities will be deducted from service charges under income from other sources. Now the other expense incurred by the owner, insurance premium, ignore. Collection charges, ignore. Interest on loan taken for constructing the house, 30,000, allowed as deduction under section 24B. During the previous year, the house was vacant for 2 months. So there is vacancy allowance. So while calculating GAV, we have to follow the steps to calculate GAV. Calculate the income from house property. That's all. I have explained all the points. Now, the answer for this question will be like this. Computation of income from house property of Sri Indra Mohan. Gross annual value GAV minus municipal taxes, net annual value, deductions under section 24, standard deduction under section 24A, 30% of NAV, interest on loan taken under section 24B, income from house property. This is the format. Every problem format remains same. Now the complicated part is regarding the GAV. Because there is a vacancy period, so GAV is calculated as follows. Here I have given natural love and affection is a valid consideration for social point of view. But according to income tax rules, it is a case of no consideration. So when the house is transferred to wife without adequate consideration, the transferor, that is husband, has to pay the tax on this income. That is the new point you have to remember. In examination, you should write this in working note. Now, for the facilities provided, service charges are collected. Hence, cost of facility shall not be deducted from ARV. Because service charges are taken from the tenant, so cost of facilities provided will not be deducted from ARV. This cost of facility will be deducted from service charges under income from other sources. Now, GAV. Since the house is vacant for 2 months, so GAV is calculated as follows. If there is no vacancy period, then directly we can calculate GAV is higher of the following three: MRV, FRV, ARV. Directly. But here vacancy period is given. That's why we have to follow some steps. The first step, calculating the ERV. ERV is higher of the following to MRV, FRV. Always in every problem we are doing. Expected rental value is higher of MRV and FRV. MRV 2 lakh, but FRV is not given. So 2 lakh rupees is the MRV. Now second step, calculating ARV, actual rental value. The rent of 12 months, 25,000 rupees per month. So 25,000 into 12, 3 lakh rupees is the ARV. Now calculating adjusted ARV. Adjusted ARV means ARV minus rent of vacancy period. 2 months vacant. So actual ARV 3 lakh. Minus monthly rent 25,000. 25,000 into 2, 50,000. So 3 lakh minus 50,000, 2 lakh 50,000 is adjusted ARV. Now we have adjusted ARV and ERV. Compare. Adjusted ARV 2 lakh 50,000 and EAV, expected annual value, is 2 lakh. ERV, not EAV, it is ERV, expected rental value. Expected rental value is 2 lakh. Now what do you observe here? The ARV is more than ERV. Adjusted ARV is more than ERV. So adjusted ARV is the GAV. Because adjusted ARV is more than ERV. ERV is 2 lakh. Adjusted ARV is 2 lakh 50,000. So hence GAV is 2 lakh 50,000. Now we take 2 lakh 50,000. Municipal taxes are given 10%. 10% on what? MRV. Always when percentage is given, calculate the percentage on MRV. MRV 2 lakh. So 10% of 2 lakh, 20,000. Deduct 20,000, 2 lakh 30,000. This is the NAV. Now standard deduction under section 24 is 30% of NAV. 30% of 2 lakh 30,000, 69,000. Interest on loan taken to construct the house given in the problem 30,000. Take the total 99,000. Subtract 230 minus 99, 1,31,000. That is the income from house property. That's it. Now income from other sources. Because the owner is charging service charges. So service charges received by the owner is taxable under income from other sources. So service charges received 5,000 into 10. Because 2 months the house was vacant. No service charges are received during vacancy period. So that's why service charges are received for 10 months. So 5,000 into 10, 50,000. Cost of services provided. The owner is providing the service of gardener's salary, gardener's maintenance expenses, and water charges. These are the two services provided. The cost of services are gardener's salary 12,000, water charges 2,400, total 14,400. So 50,000 minus 14,400, 35,600. This is the income from other sources. That's it. So what you observe is every problem, one or two new points will arise. Remaining all the points, every procedure is same. So comparatively, it's very easy to learn the how to compute the income from house property. Now, 12th problem. Srimati Indra is the owner of two house properties. From the following particulars, compute the income from house property, tax liability. If income from profession is 6,09,300 and qualified saving is 1 lakh. Again, new point is given. We have to compute income from house property and also we have to compute tax liability. When she is having income from profession also 6,09,300 and qualified saving under section ADC, that is 1 lakh. House 1, house 2. Date of purchase, we are not concerned about date of purchase. Municipal rental value, MRV is given, FRV is given, SRV is given, ARV is given. When standard rental value is given, it means the house is covered under Rent Control Act. So at different steps we have to calculate the GAV. Then interest paid on loan taken to repair the house, it will be allowed as reduction under section 24B. Municipal taxes 10% and 12%. This will be calculated on MRV. Then unrealized rent is there, vacancy allowance, outstanding rent. The second house is purchased for a price of 14 lakh and part payment is made to the vendor and interest due 30,000 is outstanding. So interest due, second house. Income Tax Act says whether you pay the interest or the interest is due, it will be allowed as reduction, right? Now, one by one we have to calculate. First house number 1, then house number 2. So here, computation of income from house property of Srimati Indra for the assessment here. House number 1. GAV less municipal taxes, NAV, standard deduction, interest on loan, income from house property. This is the format. Same format for house number 2 also, right? In working note, we have to calculate the GAV, gross annual value. See carefully. Calculation of GAV, house number 1. Step 1, ERV is higher of the following two, MRV, FRV. Given in the problem, MRV 1,10,000, FRV 2,52,000. Given. So higher is 2,52,000. That is the ERV. Now adjusted ERV, because we are given standard rent. Whenever standard rental value is given, we have to calculate adjusted ERV. So adjusted ERV is lower of the following two. ERV, which we got in first step. In first step, ERV we got 2,52,000. Second, SRV, standard rental value, 1,70,000. Whichever is lower, that is the adjusted ERV. So adjusted ERV is 1,70,000. Now adjusted ARV, how to compute adjusted ARV, actual rental value, see carefully. Adjusted ARV is equal to actual rental value minus vacancy allowance minus unrealized rent. So 2,40,000 is the actual rental value minus unrealized rent is 30,000 and vacancy allowance is 10,000. So ultimately 2 lakh rupees is the adjusted ARV. Now adjusted ARV 2 lakh and adjusted ERV 1,70,000. Adjusted ERV 1,70,000. So ARV is greater. Adjusted ARV is greater than adjusted ERV in spite of vacancy loss and other factors. Hence adjusted ARV is the GAV. So how much is the adjusted ARV? 2 lakh. So GAV is equal to 2 lakh minus municipal taxes. 10% of MRV. MRV is 1,10,000. 10% of 1,10,000, 11,000. Deduct 1,89,000. 30% of 1,89,000, 56,700. Interest on loan given in the problem 40,000. Take the total 96,700. 92,300 is the income from house property for house number 1. Similarly, we'll come to the house number 2. Again, in working notes, we have to calculate the GAV. House number 2. ERV is higher of the following two. MRV, FRV, 1,50,000, 1,40,000. Whichever is higher is the ERV. So 1,50,000 ERV. Second step, adjusted ERV, because standard rental value is given. So adjusted ERV is lower. ERV 1,50,000, SRV standard rental value 2,10,000. Whichever is lower, 1,50,000 is lower. That is the adjusted ERV. Now adjusted ARV, actual rental value. So adjusted ARV is equal to actual rent received plus rent outstanding. In house number 2, there is rent outstanding also. That will be added to actual rent received. So actual rent received plus rent outstanding minus unrealized rent minus vacancy allowance. So 1,65,000 is the actual rent received, 15,000 is the outstanding rent, 26,000 is the unrealized rent, and vacancy allowance is 12,000. So 1,42,000 is the adjusted ARV. Now adjusted ARV is 1,42,000. What is the adjusted ERV? 1,50,000. So here adjusted ARV 1,42,000, adjusted ERV 1,50,000. So adjusted ARV is less than adjusted ERV on account of vacancy factors and other factors. So adjusted ARV is equal to GAV. So how much is the adjusted ARV? 1,42,000. So here we have taken GAV 1,42,000. Municipal taxes 10% of MRV. MRV is 1,50,000. So 12% of 1,50,000, 18,000. Deduct 124. 30% of 1,24,000, 37,200. Interest on loan given in the problem 30,000. Take total 67,200. Deduct 67,200. 56,800 is the income from house property, house number 2. So we got income from house property, house 1 and house 2. Finally, it is asking you to calculate the tax liability on the total income. This SSC is having two incomes. Indra, Mrs. Srimati Indra is having two incomes. One income from house property, another income from profession given in the problem. So income from profession 6,09,300. Income from house property, add up both 92,300 plus 56,800. Total 149,100. Take the total 758,400 is the gross total income. From gross total income, deductions are allowed under section 80. So only one deduction is there, 80C, qualified savings. In the problem it is given, the qualified savings are 1 lakh, deduct 1 lakh. So 6,58,400 is the total income. On this total income, we have to compute the tax liability. The first 2,50,000, the basic exemption limit is 2,50,000. The first 2,50,000, no rate of tax, no tax. Next 2,50,000, 5% is the rate. So up to first 2,50,000, no tax. Next 2,50,000, 5%. So 5% of 2,50,000, 12,500. The next slab goes from 5 lakh 1 to 10 lakh. That means 5 lakh rupees the slab. But our income is 6,58,000. From 6,58,000, first to 250, next to 250, and a 5 lakh rupees over. So 6,58,400 minus 5 lakh. So remaining 1,58,400. On this 1,58,400 balance, 30% is 20% is the tax rate. 20% is the tax rate. So 1,58,400 into 20%, 31,680. Now you add up both 44,180. This 44,180 is the tax on total income. On this tax, add health and education cess 4%. Always. So 4% of 44,180, you will get 1,767. Add up 45,947. This is the tax liability. Now, according to income tax rules, the tax liability should be rounded off to the nearest 10. The last 47 is there. So instead of 47, we'll take 50. So 45,950 is the rounded off tax liability. That's it. So in this problem, two problems I've explained, that is 11th and 12th. Totally 12 problems I've explained on income from house property. So if you're watching all the videos, definitely you are in a position right now to attempt any problem on income from house property. Inshallah, we'll continue the next problem in the next video. So if you are satisfied, give a like to the video. Share my channel among your groups, among your friends, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. Subscribe my channel if you have not yet subscribed, and buy the super thanks which is given below my video. Inshallah, we will continue the next problem in the next video.